We heard Tom's takeaway from today's GDP numbers. What were yours?
Yeah, I mean, similar sentiment here where the China rebalancing story shift towards consumption, shift towards services, shift towards a bit more of what we'd say perhaps a developed market composition of GDP is happening. That's not to say, though, that investment is completely dying and industrial production is as low as it is elsewhere. In fact, industrial production numbers are still quite healthy in China, and there's still quite a lot of development there as well. So overall, quite pleased with these numbers. Watching a few interesting things like the shift in fixed asset investment, private companies now taking a bit more of a step than state-owned companies in China. Very important to watch, and overall wraps up nicely with our positivity on emerging assets, emerging market assets, particularly in Asia.
Do you worry about the trade rhetoric, the protectionist tone we're getting from the US president, and how that might feed through to the Chinese economy?
It certainly is a worry. Trade wars are not going to be a good thing from the economic perspective of actually most countries involved, partly because of that export-oriented nature of many of the emerging world, as well as just inflationary measures that may even affect the US. But back to the basics here, really, the amount of assets or goods that are going to be taxed is actually quite small at the end of the day compared to the broad spectrum of Chinese GDP and even US GDP. So in terms of numbers, we're not worried about the current proposed plan. It's the signal beneath the numbers that if it continues to escalate might be more of a concern, but at the moment now allows us to still maintain our view.
Nandini, let's look at this chart from the Queen of Charts, our star chart compiler, #BTV9172. This is playing into that theme that China might buy fewer US treasuries, but the tick data showing that Chinese actually holdings of treasury bonds increased slightly in February. The China-only holdings is in yellow. China and Belgium holdings of treasuries is in white. Belgium, of course, is the home of many Chinese custodial accounts. That fear, is it warranted that China's going to buy fewer treasuries as a tool in this spat between the two countries?
It's easy to get carried away, I think, with some of that rhetoric that they're going to start dumping treasuries and cause all sorts of market fluctuations. We are actually not worried about this in that same sense. It would be having a lot of effects on their currency as well if you just start immediately liquidating the positions that you've got if you are China. So, something to watch, but the data tells us it shouldn't be too much of a concern yet. And also, I think it's a broader issue if they start doing that. I don't think it's a retaliation in terms of the trade wars per se.